4 or 5 months are set to look a lot like this, a stagnant economy, zero growth, and
by hiking interest rates, the Bank of Canada has slowed the economy.
For many Canadians, 2022 was a tough year as interest rates rose, inflation soared, and the economy slowed. Unfortunately, 2023 doesn't look like it'll provide much healing. Analysts say a recession is looming and unemployment is expected to rise, all while prices remain high and interest rates bite into the purchasing power. Even seasoned forecasters have found this a tricky period to navigate. The economy is awash in contradictions and the data are quite noisy. By hiking interest rates, the Bank of Canada has slowed the economy by making the cost of borrowing more expensive, which in turn takes a bite out of demand, which cools inflation. The big question is, will the economy see a rough landing with economic turbulence, or a so-called soft landing with a smoother outcome? Canada, known as the second largest country in the world, is located just right above the United States and is bordered by 3 oceans: the Atlantic, the Arctic, and the Pacific, all on 3 sides. Canada and the US share the world's largest border between any 2 countries, stretching around 8,891 kilometers, or 5,525 miles. The most fascinating thing about Canada's geography is that 80% of the entire Canadian population lies within just 100 miles of the United States border. And in fact, 50% of all Canadians live just south of this line. The province of Canada, Ontario, accounts for 38% of the Canadian GDP, and because of that, most people tend to live in areas where economic activities are available. That is why the largest industries in Canada, real estate, mining and manufacturing, are mostly located in these provinces. Since the financial crisis, house prices in Canada have doubled. This housing boom is spurred by consumer spending. In 2009, the government stimulus program to prop up the economy and the central bank's interest rate near 1% encouraged Canadians to pile up debt to buy houses. Why are they buying houses? It's because they hope, or fear, that prices will keep rising. In the past year, rising interest rates have softened housing prices for now, but most renters in Canada still feel that the dream of homeownership may still be attainable. According to the results of an Ipsos poll, around 63% of Canadians who don't own a home have given up on ever owning one. According to a report by the Canada Mortgage and Housing Corporation, immigration has been a significant driver of rental demand in recent years. Many newcomers in Canada initially rent homes rather than purchase, which helps to sustain demand for rental units. The thing that makes the Canadian housing market an outlier is its consumers, whose ability to borrow and spend may be nearing its limit. Canadians spend a bigger share of investment capital on housing than businesses. Many economy watchers say the strength of Canada's labour market will act as a buffer, even if the US, its biggest trading partner, falls into a recession. Capital economies say that robust economic immigration with more newcomers spending, bolstering the economy, may save the day. So, spending per person may fall, but overall spending would stay the same or even climb. Trouble in the American banking sector has many investors and lawmakers on edge, and last week's surprise production cut by the OPEC Plus cartel of oil-producing nations is expected to drive global oil prices higher. Compared to the US, Canada invests less in businesses as a share of the GDP. Business investment is made by both domestic and foreign individuals. Canada's lower level of domestic investment is filled by foreign direct investment, which is mostly done by the US. In fact, Canadian enterprises rarely glitter in the world. A survey of 900 executives found that Canadians are more risk-averse than their cousins south of the border. At a time of strain in Canada's partnership with America, it no longer seems acceptable that 6 of the 10 biggest companies by revenue on Fortune's list of the world's largest are American or Chinese, while the top Canadian firm, Brookfield Asset Management, a finance manager, is ranked only 158th. Most of the unique traits of Canada's economy are highly influenced by the United States. With it being a close neighbor and having a close economic relationship with the United States, Canada has developed its economic policies and practices in response to the influence of its southern neighbor. Just to give you an example, American companies have established business operations in Canada primarily to avoid tariffs or taxes, but headquarters and intellectual property often stay south. Also, many new and existing startups in Canada are being acquired by foreign companies, especially American ones. This is partly because when small Canadian companies go public by selling shares on the stock market, they lose tax benefits. Therefore, these companies are more vulnerable to being acquired by larger foreign firms. All of these have made the economy less productive and innovative than America's. To put the difference in perspective, Canadians make around $60,000 per year on average, while their American counterparts make around $80,000. The truth here is that Americans work more hours than Canadians, about 3.5% more. While the average American worker produces $74 of value per hour, the average Canadian worker produces just $57 of value per hour. Canada also spends very little on R&D among G7 countries. According to the World Intellectual Property Organization, the US produces roughly double the number of patents per person than Canada. Productivity growth is directly related to improved standards of living or income per person. Canada's income per person in 2022, adjusted for purchasing power parity, was $57,800, nearly $17,400 lower than in America. This gap has not only been a big problem so far because Canadians at the bottom half of the income scale are better than Americans in their position. This gap has not been a big problem so far because Canadians at the bottom half of the income scale are better than Americans in their position, thanks to the lower levels of inequality. A measure called the Gini coefficient assesses the gaps in incomes in any given country. The Gini coefficient ranges from 0 to 1, with 0 indicating perfect equality and 1 indicating perfect inequality. Over the last 42 years, the Gini coefficient in Canada has never risen beyond its US counterpart. Inequality in the US has always been higher than in Canada, and in fact has risen faster for the entirety of those 42 years. However, compared to other developed countries, Canada's economy remains less competitive. According to the IMD World Competitiveness Ranking, Canada ranks 14th out of 63 countries. Its worst performance in the annual survey's history, which dates back to 1997. Currently, Canada is being outperformed by aggressive free market economies such as Singapore and the US, as the Netherlands, Norway, Denmark and Sweden are known for their strong labor protection and high wages. While competition is generally seen as a driver of innovation, efficiency and economic growth, about 10 to 15 years ago, Canada was really innovative, despite facing stiff competition from larger and better funded rivals. Also, traditionally, Canada has had fewer government initiatives to promote research or entrepreneurship compared to some other countries. The fact is that Canada's dependence on natural resources for economic growth has discouraged investment in other sectors, such as manufacturing, research, and business activities. In 2021, natural resources directly or indirectly accounted for 17% of nominal GDP, and they comprised 51% of the value of Canada's total merchandise exports. However, Canada's two biggest exports, oil and vehicles, are both declining and may continue to do so even in 2023 and beyond. In the vehicle manufacturing industry, production has dropped from a peak of 3 million vehicles in 1999 to 1.4 million in 2020. I'm coming up on my 10th anniversary as a chief economist. I would say 2020 was the weirdest year, said BMO's chief economist Douglas Porter. But this year would give a very odd cycle, he added. Looking ahead, he says inflation will continue to dominate the economic story of 2023. BMO's forecasts show inflation will remain stubbornly high, especially through the first half of the year. Despite all its economic problems, Canada remains one of the strongest economies in the world. It has a stable democratic government, polite and confident people, a good business environment, and is perceived as one of the least corrupt in the world. However, Canada's growth has not been as strong as other advanced economies for a long time. And according to the OECD's predictions, it is quite unlikely to improve anytime soon. So what are your thoughts on Canada's economic nature? What do you think needs to be done to help its ailing economy? And do you think its economy will improve anytime soon? Please don't forget to leave your suggestions in the comment box below. This brings us to the end of our video today. We hope you guys found the video informative and enjoyable. Just don't forget to give us a thumbs up if you loved watching. Also, don't forget to hit the subscribe button and the notification bell to be notified about any of our uploads on economy. Thanks for watching, and let's meet in our next video.